What's going on, motherfuckers? Throwing together a weekly recap video going over this week's price action and expectations for next week. I have a lot of shit to talk about. I have a lot of charts to go through, a lot of points that I want to make. So I'm not going to really drag the intro out too much. I do want to say one thing before I get into the video. For the millionth time, the market is bullish. And I've been on YouTube saying this for a year now, that the market is bullish. And guess what? All the indices are at all-time highs. Blue chips are at all-time highs or on their way, very close. The only thing that has not happened yet is small caps squeezing, because essentially that's how small caps work. You know, blue chips, their macros, they climb steadily, moving normally how a stock should. Smaller caps, which includes the memes, have not started moving yet. They haven't gotten to their bull cycle yet. But they're about to, and their bull cycles, again, are vertical lines. They're going to catch up to the rest of the market. So with that being said, let's jump into the video, starting with the indices as always, and we'll start with Dow Jones, which formed a new all-time high this week and Friday. So climbing up this week, battling resistance at 3,800, and on Friday broke through it, another new all-time high for Dow Jones. Breaking through resistance at 3,800. The next stop for Dow Jones is 39,100. So a lot of room to the upside here. Again, it's going to continue to climb. We have only just entered into the bull cycle in the market. There is plenty of upside market-wide still, and that applies to Dow Jones, NASDAQ, all the indices, blue chips, small caps, meme stocks, whatever. The entire market's bullish. So that's Dow Jones. NASDAQ now. Just going to fly through these. NASDAQ, new all-time highs this week again. Shocker. So rejecting off resistance, 17,600 this week. Came down to fill the gap that we left open on Tuesday, I believe. Yes, Tuesday. Wednesday gapped up, new all-time high to the resistance point at 17,600. Thursday and Friday pulled back to fill the gap. New all-time highs on NASDAQ this week. There's going to be new all-time highs next week too, because that's how a bull market works. The indices are going to continue to climb to the upside. Again, they have only just hit new all-time highs. The market's bullish. The indices just hit new all-time highs within the past month. They're going to continue to climb. There's no pulling back here. Bull market. Again, the market's bullish. That's NASDAQ. S&P 500. Take a random guess. New all-time highs this week. Now, I said 490 was on the table this week. Here was Friday's close. Friday was actually the push for all-time highs, the previous all-time highs on S&P 500. Last Friday, absolute boomstick here, new all-time highs. And then this week, Monday, Tuesday, Wednesday, Thursday, Friday, just climbing. Claimed 485 resistance. Tested it once, I believe. The high of the week, 489.12. I said 490 was on the table. Didn't quite get it. 489.12 was the high of the week. Guess what happens next week? New all-time highs. Again, the market's bullish. I'm going to keep saying that because I've been saying it for a year, and apparently people still have not figured that out. So the market's bullish. SPY, NASDAQ, Dow Jones, blue chips are going to continue climbing. Small caps, including meme stocks, are straight lines. Their bull cycles are vertical lines. Squeezes, and they're going to catch up to the rest of the market very shortly. So claiming 485, high of the week, 489. Next week, more upside. All right. I'm not saying for certain that SPY is hitting $500 next week, but it's going to come close. I would at least expect to visit this range here at 496. If not, SPY sees $500 next week. Again, that's the beauty of a bull market. Shit's going to keep climbing to the upside for probably the next year. So moving on from that, IWM. Now getting into the smaller caps and why they have not started moving. I covered this in my I don't know, two or three of my past videos. Dow Jones is already at all-time highs. NASDAQ is already at all-time highs. SPY has recently hit all-time highs, going to continue climbing. I didn't throw in Russell 1000, but Russell 1000 hit all-time highs last week as well. Now Russell 2000, IWM, and this is why the meme stocks and the small caps have not started moving yet. They have not gotten into their bull cycles because IWM has not broken its macro pattern. This parallel channel here, 162 to 199, it's been trading in this for 2 years, coming off of the spring poked our head through, pull back for the retracement, and this week, green. As I said, worst case scenario for IWM was green this week, and that's exactly what we saw. Albeit it was not too much. It was $2 to the upside on the week, I believe. But IWM is about to break its macro pattern to the upside, and more than likely, the bull cycle here is going to look like a squeeze. It's going to look like a very vertical line to all-time highs, kind of like what we saw in 2021 back here. Obviously, yes, I mean, this is an index, so there are pullbacks along the way. It takes some time, but more or less the line is vertical, and I'm expecting the same thing over here. I'm expecting all-time highs on IWM probably within the next 2 months. So as soon as we break out of 199, break the macro resistance to the upside, this thing is going to get some legs. It's going to start climbing more rapidly, and things are going to get vertical here. And like I've been saying, the macro break on IWM, which is the gap 199 plus, will be simultaneous with the meme stocks. The meme stocks are in the same exact spot. Small caps are in the same exact spot, looking for macro breaks. So this is the macro perspective on IWM. Looking at the side-by-side here, I mentioned this a few times, this green box right here compared to this right here. So the 2021 macro break versus the 2024 macro break, on IWM. So let's look at that side-by-side now. And here it is. And I've mentioned this a few times actually, and I'm going to continue to do so until we actually get the break. But here is the side-by-side perspective of the macro break on IWM in 2021. And now we are in 2024 playing out the exact same pattern at the exact same levels, looking for the exact same move. So starting with the jet test up to the top, this white line is the same price on both sides, by the way, 199.11. So you break 199.11 to the upside during the jet test. Find your top, pull back in, find a bounce, pull back in, find a bounce, double top here, middle of the range, double top here, middle of the range, and then sell off for the spring, form some higher lows here, battling to reclaim support. You do, back up to the middle of the range, consolidate sideways for a little bit, and then the gap up $200 plus is what we're looking for still. Now, I said last week that worst case scenario this week for IWM was green. This upcoming week, IWM is going to see its macro break. IWM is going to fucking be on a tear next week. Looking for, I would say, minimum $205 on IWM next week. I do expect to find a rejection somewhere around 210, 212, and I wouldn't even be surprised if we saw that next week. As a matter of fact, that's what I'm going to be looking for is 210. But at the absolute minimum here for IWM next week, $205. So we're gonna be seeing the macro breakout on IWM next week, along with the other indices, SPY, Dow, Nasdaq. They're going to be shredding to the upside next week as well. We will be breaking out of this parallel channel on IWM next week, and I expect to find a rejection. I don't have the resistance drawn here, but somewhere around 210 to 215 is what I'm going to be looking for the first stop. So that is IWM. Again, that will be simultaneous with macro breaks on the meme stocks. On the micro, aside from Monday, Monday we just ripped up here and then kind of held the range. Tuesday, Wednesday, Thursday, and Friday were the exact same day for IWM. In the morning, gap up to 197, pull back, curl up end of day. That was Tuesday. Wednesday, gap up to 197, pull back all day intraday, curl up end of day. That was Wednesday. Thursday, gap up to 197, pull back all day intraday, curl up end of day. And then Friday, gap up to 197, pull back all day intraday, and then curl up end of day. We have this resistance and this support are meeting on Monday. IWM is breaking out of this next week, and we'll be seeing $200 plus. At the bare minimum, I would expect $205, and the likely scenario is that we visit 210 next week. So that's it for IWM. Again, the break out of the macro for IWM, $200 plus, will be simultaneous with small cap macro breaks, including the meme stocks. So this looks great. Now I want to talk about something else because we have the FOMC meeting coming up next week. So I want to look at the side-by-side of S&P 500 and IWM and the previous two FOMC meetings. So the November 1st FOMC meeting, SPY ripped to the upside. And For IWM, FOMC, November 1st, rip to the upside. Roughly an 8% move on IWM there. That was November. December's meeting, December 12th, rip to the upside for SPY, and December 12th, IWM, rip to the upside again. Another 8% move on IWM there. Now we have FOMC next week, Tuesday and Wednesday. That is going to be the catalyst for the macro break on IWM. So if we do not break out of the resistance on Monday, 199 plus, Tuesday and Wednesday are going to be very, very green for IWM, very green for SPY, very green for Dow Jones, very green for NASDAQ. The market is going to shred next week. Nothing I ever say is financial advice, but next week the market is going to be shredding to the upside. Maybe not Monday, but Tuesday, Wednesday, Thursday, Friday, market's going to be shredding. Well, let's just say Tuesday, Wednesday, potentially we see a pullback day, Thursday, Friday, but we're looking for macro breakouts on IWM. Is essentially the point that I'm getting at here, and it will be on FOMC next week. So that's that. Now, one other thing about that, and before I even click on this, I've talked about this multiple times with AMC and the fractal pattern of AMC, how it's a shitty macro, just downtrending to a point until the all-time low landmark is in, and then once it's in, it's a slow, choppy uptrend, and then a straight line into the squeeze. And saying that January 2021 really didn't have a catalyst for the meme stocks as far as the companies went. So just take, for example, AMC and GameStop. There was no catalyst for the actual company itself for them to make those moves that they did. But there was actually something else, and this is pretty interesting. There was an FOMC meeting, January 2021, January 26th and 27th of 2021. This is the peak date for AMC as well as GameStop. And again, like I just said, there was no actual news for the company when we squeezed in 2021, but there was an FOMC meeting Tuesday, Wednesday, January 26th and January 27th of 2021. Well, guess what? January 2024 FOMC meetings, January 30th and 31st, this Tuesday and Wednesday. Very, very possible this is the catalyst. And it's lining up that way, especially with the macro break that we're looking for on IWM. This is what I forgot to mention before on the side-by-side here. The gap up, the actual macro break itself in 2021, this was the day after, this was January 6th here, the day after AMC found its all-time low landmark. So I was saying once we gap up here on IWM, the bottom is in for AMC confirmed. Though we haven't gotten it yet, the bottom very possibly may be in. I'm assuming it's in, but still, we're looking for this gap up on IWM, which will be simultaneous with gap ups on meme stocks and other small cap tickers. Just like in 2021, we're playing out the exact same pattern at the exact same levels, looking for the exact same move in 2024. And funny enough, we have FOMC next week, the 30th and 31st, which is also AMC's OPEX target. 7 trading days post OPEX is January 30th next week. Which is also the FOMC meeting on Tuesday and then Wednesday the 31st. So this looks very, very good. Very interesting timing. Looks great. No complaints whatsoever. And with that being said, let's just get into AMC's macro really quick and the AMC update. So macro perspective, the bull cycle of AMC, the bear cycle of AMC, the bull cycle of AMC, and the bear cycle of AMC. January, June squeeze equivalents in the green and yellow, V-shape, macro break in the blue box, and then into the downtrend, forming lower highs and lower lows all the way down here until January 2021, where the all-time low landmark was in. Slow, choppy uptrend, break macro resistance, and a straight line. Reset, bull cycle, and then bear cycle again, lower highs and lower lows all the way down to January 2024 now. And we have recently poked out of macro resistance here, and we're looking for a straight line squeeze, which very possibly may be coming next week. Again, nothing I ever say is financial advice, but the timing of everything and the way that IWM looks and the 7 trading days post, the FOMC meeting next week, it looks like next week is going to be very, very green for the market. So that is AMC's macro. The downtrend, as always, here's the update. I've covered this multiple times, the 4 touches, so macro break, sideways consolidation, and then into the downtrend. First touch, second touch, first touch, second touch, break below the 200 EMA on both sides, third touch is the fake out, and then the fourth touch and breakout is the squeeze, the straight line we're looking for. Although we did poke out of the macro resistance here, we're still looking for the macro break, the gap up, the actual break of the macro, which is the straight line squeeze we're looking for. Now, with that, here's the flat portion. I mentioned this in my last video, which is roughly 1 year in length. So your first bottom, choppy, gap up, 3 peaks poking above the 200. First bottom, choppy, gap up, 3 peaks poking above the 200. The W fake out, breaks to resistance, and then the final W iteration here. Second bottom, tri-peak, third bottom, second bottom, tri-peak, third bottom, all-time low. Uptrend, and then a straight line. Which was roughly 1 year in length on both sides. And yes, we have poked out of the resistance the way I have it drawn here. The way I've been showing it in my videos, the macro of AMC. We are now poking out of it. But if you take a look at this on the weekly, we're going to be poking out of it next week. So this is a weekly perspective. It's a descending wedge. First touch, second touch, third touch, and here we are, weekly candle. Then the support, first touch, second touch, third touch broke below, reclaimed, and then tested, bounced off, and now we're sitting right under resistance. This trend line that I've been showing, it's a 3-year trend line. I mean, the way you have it drawn, depending on which wicks you're touching, it's plus or minus a few days here. On the weekly, next week's weekly candle is going to be poking out of it, with a noticeable shift in the behavior on the volume profile here, and descending volume on top of that, which is exactly what you want to see during an accumulation. We're looking for a surge in volume here, and a squeeze. So that's what we're going to be looking for there. I want to mention one other thing, that I had this trend line drawn in December, early December, and honestly I completely forgot about it. But this is the micro resistance on AMC, this trend line here on the left. This is December 13th, 2023. Running this trend line down here off this top wick where you rejected, broke out, and then the retest failed. We fell back into it, and this is just acting as resistance here. Here it is updated a month and a half later, January 26, 2024 now. Same exact line. Nothing is different about it. It's the same exact line. So there's the rejection, the pullback, the breakthrough. Retest fails, breaks back in right off this top wick here you're seeing here. And we've been battling this resistance the whole time. This whole entire time from a month and a half ago, December 13th, until today, until Friday, we've just been fighting this resistance. And the breakout of this resistance here is more than likely going to be coinciding with our macro break and our squeeze. So that is that. I thought that was interesting. I was just looking at some old charts yesterday, saw that trend. I was like, let me look at that updated. Sure as shit, we're still battling that as resistance a month and a half later. Pretty crazy. So the breakout of that looks like it's going to be the breakout of the macro, our macro break. Now, the channel, this is where we left off. Off of your all-time low landmark, you get into the uptrend, slow, choppy uptrend, the channel. Now, I said in my last video, I'm going to use the July tracking as reference, as I think it's tracking better, where this would have been the spring that you're seeing here, the crime candle, right before you get to the top of the move, and then the descending channel, your 1, 2, 3 touches, and then the macro break in July. So we had the first and second touch. We left off the week here. Looking at this updated now, here it is. So I was live this week. I drew an arrow down right here and right here. So I was looking for downside that you're seeing here, all this chop and downside to a lower low, which is what we got. We actually broke below the channel, chopped here, reclaimed it on Friday, and then retested. This looks great. We're still looking for intraday climb here for our third touch, and that should be the end of the macro. And again, that would probably be like a Monday thing. If we see this Monday, Tuesday, Wednesday is going to get very interesting. So that's what I'm going to be looking for AMC. Now getting into GameStop. GameStop's macro. And here it is. I've talked about this multiple times. Begins or ends with the all-time low landmark. V's out. Your bull cycle on GameStop, V-shape, and then back into the downtrend. All-time low landmark, higher low, straight line squeeze, V-shape, and then the downtrend to your all-time low landmark once again. Coming off of that, I mentioned a few times now that a lot of tickers are in the same spot. So, for example, GameStop, And before I actually get into that, let me just talk about this. It's a very simplified, dummied down version of the fractal in a downtrend for GameStop. Um, and I also have macro resistance drawn here for GameStop as well. So each iteration of this essentially plays out the same way, where you have a W with a lower leg on the left. So it's going to just be a repeat. So a W, lower leg on the left. You get into the jet test of it, and then you get these two peaks, higher peak on the left. So 1, 2 peak at resistance, come back down to support, and then fractal breaks to the downside. You break through support, form a lower low. Then another W. Here's your W pattern, lower leg on the left. Jet test back up. 1, 2 peaks, higher peak on the left, right at resistance. Come back down to support. Chop, fractal breaks to the downside again. And then another W, lower leg on the left. Back into the jet test, back up to the top. The resistance, your 1, 2 peaks, higher peak on the left. Coming back down to support again, chopping at support, fractal breaks to the downside again. W again, lower leg on the left, into the jet test, climbing back up, your 1, 2 peaks at resistance, down to support, and here we are. Now, in each previous iteration, when you come back down to support on GameStop, the fractal breaks to the downside. So right here, these red boxes are indicating the location, the fractal that GameStop currently is right now. You break to the downside here, you play the whole thing out again. At support again, break to the downside, play the whole shit out again. Down to support, break to the downside, play the whole shit out again. Now we're at support again. So GameStop needs to form a higher low here. And essentially, if it does, it's going to squeeze a straight line. And another example of that is Becky. So BKKT, same shit all the way down, just like GameStop, all the way down in the downtrend, forming lower highs and lower lows, coming off the spring. Broke out of macro resistance, retesting. If BKKT forms a higher low here, which it's going to squeeze, straight line style. And then another one, Bion, same thing. Lower highs and lower lows all the way down to your all-time low landmark, coming off the all-time low landmark, the V. Pullback, if it forms a higher low here, which it's going to squeeze. So same shit. Small caps in general, and then IWM, showing the macro here. The macro break on IWM out of this parallel channel is going to coincide with macro breaks on the meme stocks and small caps. And that's what we're looking for. And we're going to be seeing it next week. IWM is breaking out of its macro pattern, $200 plus next week. If you want to play calls, go for it. Enjoy it. That's free gains. It's a lock. IWM is breaking $200 next week. So that's pretty much everything I wanted to talk about for the video. Just a refresher. In case anybody forgot, the market's bullish. It has been for the past year. So Dow Jones, new all-time highs this week. Broke resistance here. Next stop is 39,100. It's probably going to see that this week. NASDAQ is at the upper level. There's not even another GANs level above. So not really sure where the next level is for NASDAQ. But NASDAQ is going to be seeing upside this week. New all-time highs as well. S&P 500 is going to be seeing 490 plus this week, possibly 500, has GANs level at 496. It will probably, more than likely, be seeing that this week. Wouldn't be shocked if we saw 500, but definitely 490 plus. IWM, breaking out of the macro this week. Enjoy playing calls on that. They're going to print $200 plus, so that looks good. The side-by-side 2021 macro break versus 2024 macro break. Here we are. We're right here at the end looking for it, and more than likely that's going to be on FOMC this week if we don't just gap up Monday. But this looks amazing. Looks very, very good. And on top of that, the breakout, again, I'm just going to keep repeating this. The break out of this parallel channel for IWM, $200 plus, will coincide with the macro breaks on the meme stocks and small cap tickers. So that's that. Now, these were the last two FOMC moves for SPY and IWM, big moves to the upside. As a matter of fact, these were the moves to the upside, and then it was just consolidation, more or less. So move to the upside, consolidate, and then FOMC, boom, to the upside, consolidate, and here we are next week, FOMC, looking for a big move to the upside on all of the indices. On top of that, AMC is at the end of its wedge on the weekly. It's right there, and the FOMC meeting in 2021 essentially was the catalyst for the squeeze. January 26th and 27th, and 2024, here we are, next week. So I think that's everything for the video. Market's bullish. Who would have guessed? Not me. That's it. Looking for upside big time next week on the indices. And hopefully we could see the macro break on AMC, GameStop, SoFi, BKKT, Bion. More than likely we will. If we macro break on IWM, the memes and the small caps are going to start moving to the upside as well. And again, their bull cycles are vertical lines, unlike the blue chips, which are just steady climbs. That's it. That's it for the video. Enjoy the rest of your weekend. Peace.